won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now. Literally one of the biggest enterprises that the world has ever seen in the trading community is going to be CYPRX. Watch, mark my words, Ezra. You already know what the vibes are. You've been in my house, bro. You've seen it. It's going to be interesting, bro. All right, so thank you for. Can you see my screen now? Cool.
Yes.
All right, so I'm going to break down GBP JPY trade scalp position during New York session buy. I was drafting up a whole bunch of things to say to you all in my head on the drive home. This is going to be like a 15, maybe 20-minute breakdown. I'm going to go a little rant psychology inclusive with the strategy that I teach you guys in the 2.0 content material on what it is that I'm going to say to you all that really allowed me to catch this trade. I can say that it was technical analysis. I can say that it was my ability to gauge the market direct correctly in the moment. However, that was probably like 20 to 30% maybe of this trade. Because when I caught this trade, honestly, I woke up and I saw the confluences like this. Like Ezra will tell you, my technical analysis, he's traded with me in person, and Emiliano, a couple of the people have traded with me in person. I don't do technical analysis on my charts. I just watch the charts, and I'm able to technically analyze the charts in my brain. Okay. You will get to the point in your trading career where you can do this, but it will require you to be a master of your psychology. So remember last week, I told you guys that GBP JPY was bearish majorly. Last week, it was selling off. And I told you all that you have to, as a trader, have the ability to determine when it's time to operate in the market and when it's time to sit on your hands. And 90% of people in this market that are participants don't have the ability to do that. They think that they should always be involved in this market. They think that every opportunity is an opportunity, which it can be to a certain extent, but real traders truly understand that having a strategy that allows you to operate more efficiently in this market, but less, is a better one. That means, how can you trade less often, but be more accurate and be more precise with your execution? Okay. So what really allowed me to catch this trade was being able to determine that last week was a week where I was going to sit on my hands and just let the market play out. I didn't see any opportunities. I wasn't forcing anything. I told you guys last week why GBP JPY was bearish because of the whole recession. And now I'm not going to get into fundamentals. We talked about that last week in the Friday Zoom call. Okay. But what I really want you all to understand and piece together is it's technical analysis 20, maybe 30% of the time. Everything else leading up to you in the moment of trading and taking that trade and having the courage to place the trade and to be able to get up and physically look at the charts at a specific time, right? Looking for a certain set of confluences, not reacting until you see that. That is all discipline and psychology, 110%. So with that rant, before I get into the technical analysis, I want you all to take something away from this, and that's you have to be mentally superior in this market or you're not going to succeed. You're not. And that is 100% fact. You're not going to get lucky. You're not going to score big randomly enough times to grow a portfolio. You have to be emotionally and spiritually and mentally superior. Like I don't, am I making sense? Hopefully I'm making sense. And people aren't. The reason why I'm saying this to you guys is because of what Ezra said. And what I'm trying and attempting to tell you all is people aren't. There's people in this community. There's people at the general public. There's people that are paying attention to what I'm giving to the world. And they think it's technical. Oh, man. And there is an aspect of technical analysis to it, which you guys have seen, right? But I'm really letting you all know right now that what I'm about to show you guys is 20% of the game. maybe 30% max. Okay. So I hope that y'all feel that. Let's dive in to the charts. Excuse me for the rant. People that are still listening to this recording, and you all for sticking here, you are the real ones. You are the real ones because you're understanding what I'm saying. Everybody else will click off this either YouTube video, this whatever video. If I decide to put this on the CYPRX content page, whatever, if you're still listening, you're a real one, because most people will click off of this. They're like, oh, this guy's ranting. Oh, blah, blah, blah. No, soak up information, have a high teachability index. It's like one of the first things you learn as a Mason, okay, is to have a high teachability index. If you don't have a high teachability index, the ability to accumulate and soak up information, how can you ever expect to become successful? So anyways, let's get in. Scalp position, JPY buys, entered in at the 165.200. Stop loss was at 165.065. I wanted to put it above the psych level 165.00. I literally haven't even marked up my chart today, so we're going to put in that psych level. That is going to be a significant player. Okay, again, remember the psych levels that I teach you guys in the advanced course material, the majors, that always plays a big role in my trades. Then we also have identifying advanced structural points. In the CYPRX 2.0 content, I teach you guys the advanced structuring methodology to track previous session buy areas. That is predominantly where the next session is going to most likely take buy positions if they are going to buy. Why? Because they're going to want to get in at a discount from where previous market participants or market makers or elites or whoever smart money is controlling this market. It doesn't matter what you call them, okay? The market makers are the only people with the amount of money to move this market. So when you're trying and attempting to identify areas where they bought from or where they sold from, you know that when they create patterns like this, okay, check this out. Here's a pullback in the market structure during London session that failed to break a previous market structure low. You can see, i.e. the manipulation window here during London session left behind early sellers in the form of a what? What it is, what do I teach you guys? Above highs. Look at this. This is a triple touch of the trend line, and it started to take place during the what? Manipulation window. I'm not going to give specific times in case I upload this on YouTube, but you guys know, look at this. Manipulation window right here during London session that we go over in the 2.0 content. And what do you see starting to build in that window? Okay, 1 touch, 2 touch, 3 touch. That is a retail trap. Why? Because retail traders are taught to sell from this type of a trend line. Okay, they have over leveraged positions now above these highs, and people that are going to be willing to buy are going to have buy stops above these highs. Okay, then we see a market failure push below a major psychological level after the market dumping into a previous low matched with bullish momentum. We failed to break below a major psychological level. Okay, that is a structural shift. You cannot deny that. Actually, let's put this up at the, oh, excuse me. You know what, we'll do the 0 level. I was going to put out the 700, but the candlestick wicks touched the 600. Okay, after that, what happened, ladies and gentlemen? All the way, I'm breaking down price action all the way up into New York session, because this is what builds us the confluence and the confidence to say the market is most likely, based off of these things, going to continue higher. And we're going to get into targets and everything that we're projecting for the New York session as to why we had the confidence to place this trade up into this region. Okay, because everything leading up to your trade has to make sense. If it doesn't make sense, why are you even pulling the trigger, right? So we see here the structural shift. Retail money beneath lows coming into the manipulation window during London session early sellers, London session early buyers. The buyers won. How? Because they failed to break previous market structure, showing us that the market maker's interest is to the upside or external liquidity in this scenario, right? From session to session. Because we're intraday traders, we're not looking at necessarily the higher time frame areas of liquidity. We're fractally identifying where the market is going to move based off of a certain set of confluences in the market maker pattern. So right here at the 164.600 psych level, London session was the very first area. This is the very first area in London session where they injected enough liquidity into the market or enough money into the market to break a previous market structure. You guys see the shift right here. Okay, this is a BOS, a break of structure top. Okay, so we can go ahead and delete this. We now know that the market makers have made a failure swing low. Okay, they failed to break previous market structure, but before that, they grabbed liquidity. This is a trap. You see that? Now they're hunting external liquidity. So until they violate lows, the market is now trending up. You get that? So check this out. The market pulls back, breaks previous market structure. Then again, in the advanced tracking methodology, what do I teach you guys? Identify two significant areas where a previous session bought from to determine where the next session is most likely to buy from, right? London session pulls back, injects enough liquidity before passing price action over to New York session into the market to break a previous market structure high. And you guys can see that all the way over here, excuse me, to the left-hand side. So now I will clear up the charts for you guys. And this is all the information that we had going into this New York session. Okay. So just to reiterate, price action comes into the manipulation window during London session. What was London session's intention? London session's intention was to manipulate early buyers beneath lows and trap sellers above highs, manipulate people into thinking the market was going to dump to grab early buyers beneath lows during the manipulation window. Okay. Then the market reversed, matching bullish momentum with bearish momentum, or excuse me, matching bearish momentum with bullish momentum, and then pushed back into a psych level to test either the strength of the sellers and the, I guess you could say, interest of the buyers, to put that into simple terms. And the buyers won. The buyers won right here. They rejected a psychological level with enough money to break previous market structure. Only the market makers can do this, ladies and gentlemen. So when you see this, you know who's in control. You now want to move in tandem with what they are doing. So that means until this area or this area is broken, we are in a bullish environment. Why? Because this is the last two significant areas during London session where the market makers had enough interest to buy price and move it higher. So that means during New York session, if they are going to have a higher price target in order to profit, because now that the market is trending up, the only way necessarily for New York session to profit right off the bat is for them to push price higher than London session. Why? Because if they're buying something and they pull their profit below where London session sold from, they're not going to profit. Do you see that? So if New York session is going to buy, where are they going to most likely buy from? They're going to push price down into a discount and buy from one of the two previous levels where other institutions bought from, because that is going to be discount on their books. Do you guys see that? Okay. You guys see how it's all playing out? It's crazy. So now let's get into the New York manipulation, and I'm going to show you guys how just gauging and being able to read price action coming into a session can literally put you at such an advantage that all it takes is for you to get in and out of the market. This trade took me, let's measure this out, from this scalp swing low to this swing high. It was about 84 pips. I think I pulled profit at the 16600 level. So roughly about 75 pips. And it took me an hour and 5 minutes to make $5 grand this morning. Stop playing. Why would you not want this information? So coming into the New York session, knowing everything that we know, the only logical reason that would bring us to selling this price action or chasing this market via sell positions, as of right now, with all the price information that we've gathered up to this point before entry, and I'll get into that in just 1 second, is we would need to see a break of these two market structure lows and a close beneath those levels or major psych levels on the way down, creating lower lows and lower highs to reverse our bullish bias that we've now generated up until New York session. Okay. So I'm showing you guys how I determine before I come into a New York session, whether I'm going to be a buyer or a seller. I've also told you guys that I know I am a predominant buyer, which gives me an edge in the market because then I'm only looking for buy opportunities. And unless I see them, I sit on my hands, which is how I was able to avoid the market all of last week. And in one day this week, make a minimum wage salary in an hour. Do you see that? It's all psychology, ladies and gentlemen. Okay. So now let's get into the entry criteria. Let's get into the confluences, because at the end of the day, okay, everybody has their different way of labeling what it is that you see in the market or what it is that you identify them as. But we know them as edges in the market. If you've read Trading in the Zone, we know that what these are, people want to call them confluences. People want to say indicators. They want to call them I don't know, trigger points, whatever, point of interests, whatever it is that you call them, we know that this is a certain set of rules that we like to live by here at CYPRX before we pull the trigger, which is we need the market to be outside of the manipulation window. We need the market to hold structure above a major psychological level. We need to show buyer's interest. That means that we need to be buying at a previous buyer's area of interest. We only buy from discount here at CYPRX. So why would you be chasing the market? I've seen people via the one-on-ones that I have, and I've taught them how to fix this, right? If the market has already bought off and you're entering into a position and your position looks like this, okay, your entry is all the way up here, stop loss down here, that is, why are you in the market there? You should not be in the market. That you, if you show me this in a one-on-one, the first thing I'm going to say to you is you were chasing the market, okay? You reacted late. Now, what this says to me is you didn't have the courage to enter into the trade. You didn't trust your analysis. You second-guessed yourself, okay? Or you were afraid to miss out and you entered late. That's what an entry like this says to me, okay? What I will tell you is you need to allow the market to come to you and be able to react when the market is at a discount, okay? So based off of what I've taught you guys, having identified these two areas, again, why did we identify these two London session buy areas? Because this was the first area where the market created a failure swing low that led to a market break of structure. This is where the first market makers, i.e. interest, to break a previous market structure high came into play. This was a manipulation move, a move to show us buyers' interest. It did not break a previous high, okay? You see that. Then the market makers, they came back down. They tested this. They tested the strength of buyers after manipulating sellers. Retail trend lines. I went over that. Breaking previous market structure again. That's our second area of interest. Now we have two areas of interest to be buyers during New York session. And look at this magic, ladies and gentlemen. What do I teach you guys? Again, let's jump down to the 1 minute time frame. We're going to identify trend line liquidity, early sellers prior to the manipulation window to give us a reason why the market makers could potentially be attacking highs. We don't just want to be buying because we think the market's going to go higher. No, no, no. We want to buy based off of a logical reasoning as to why the market could go higher. So check this out. Right here in this area, all sugars. Okay, I'll go ahead and I'll extend this up a little bit. So right here in the manipulation window, give me a second, tea break. Right here in the manipulation window, we already know everything that we know on the 5 minute chart coming up to this point. We have our blue areas of interest. We have the market order flow direction in which we're going to be attempting to trade it based off of the confluences. And we will only shift our analysis if the market breaks these blue level market structure lows with a candlestick body close and a lower high underneath of them. That is the only thing that will inverse our buy bias. Okay. So we have our exit plan. Coming into the New York session, what can we see, ladies and gentlemen? Excuse me. Early buyers beneath of lows in the form of a trend line all down here. I'll clear some of this up. This is now on the lower time frame. Okay. This was our area on the 5 minute time frame that we identified. What do we see here? Now we're in the manipulation window. We see trend line liquidity beneath lows, early buyers. And we also see right before the market broke out of the manipulation window, trend line liquidity above highs. Well, we already have a bullish bias. And we know that until the market makers break this level, which was identified on the 5 minute chart, and start to create lower lows and lower highs underneath of it, that we're in discount from where London session bought from. Do you guys see how easy that is? So literally the market came. It came to us, so we're not chasing the market. We're not trying to trade up here. Why? Because when the market was up here, look, I'll replay price action. Okay, when the market was up here, was it at a discount? If we're measuring, excuse me, from the low, from where London session bought from, up to the high, you can clearly see that the market was not at a discount. It touched into 50% discount from where London session bought from. But are we going to be buyers at 50% discount? Oh, excuse me, I'm not. I choked on my spit, sorry. I'm not. I've taught you guys that I trade from where? 62 to 100% discount. So what I like to do is I like to draw a box in here so I can clear up my charts. I will just make this box a certain color. It doesn't matter what color, like whatever. I have so many different boxes in my charts. Who cares? It just whatever you want it to be, right? So we're going to put it to that one, get rid of this. Stupid Fibonacci, because it doesn't make sense. You shouldn't have it on your charts when you're trading. You don't need it. It's just a tool to determine where discount is going to be for future institutional interest. That's it. It's not a magic tool. It's going to tell you where price is going to go. That's unrealistic. Okay. Market makers don't know you're drawing Fibonacci on your charts. Neither do they. So now we just wait for the market to come to us. You set alarms, alerts over here, literally, boom. You can set an alert at every single psychological level. Draw yourself a little alert, type it out, what you want to see in the alert. Price crossed certain level, and boom, you wait. And all I simply did this morning when I woke up was I woke up at about 4:30 in the morning. So that's right when price action was right here. I analyzed all that. I watched price action play out until the manipulation window price action broke out of play, which you guys know that specific time. And I waited to see if the market would come back down to my area of interest. And it did just that. Boom. You guys can see from the entry criteria, I entered into the 1652603. So now I will go into the entry criteria. Okay. Major psych levels. We have what? The 16500. And above that, we have the 165200. Okay. So with that being said, watch this. What do I teach you guys in the advanced content and the 2.0 content? That if we see a failure candlestick close below major psych levels, test of those psych levels, a bullish environment, and a discounted price, you have a higher probability and an edge in the market alongside logical target areas for a trade to go in your favor. We do not know the outcome of the market, but what I'm attempting to show you guys is how I build a higher probability for a trade to go in my direction. That's it. And so check this out. With all those confluences being said and being put in place, logical target areas, reason as to why the market could pull back because we have manipulation lows, reason as to why the market could reverse back higher because we have a bullish environment, and logical target areas if the market pulls back as to where they could be targeting via early sellers in this market. Okay. Then this is most likely one of the areas where they're going to buy from. Once the market comes down into that area, you have to be able to determine and have the guts and the courage to trust your analysis and pull the trigger. That's all that's left. That's all that's left. So let's play some of this out. Dang, did they move it? Did they update TradingView? You guys remember when this was like a little drag box? That's weird. Well, that's how long I haven't been on TradingView. You get to a point where when you can trade off your cell phone, you don't really need your computer anymore, honestly. I just do my technical analysis on my phone on MetaTrader. Okay, so boom, market breaks out of the manipulation window, pulls back into our area of interest. So now alarm was triggered, but we know that up at the top of this box, price is only 50% discounted. Am I going to be a buyer here? No. Personally, I like at least 62% before I buy. So that way I have a proper risk to reward. We know as traders that risk management is the #1 priority. Obviously, of course, the more that you're risking, the more exposure your capital has to the market. And remember, our #1 rule as traders is the preservation of capital. So you want to attempt to get at least 3-to-1 risk to reward, or 1-to-3, whatever it is that you want to call it, right? Where you're risking 1% of your capital to gain 3%. So this is what we're looking for minimum, right? This trade, where our target areas are, remember, our logical target areas were here, okay? This trade has to at least make us 3% if it's going to attack these highs. So look down at your risk level right here, your risk to reward ratio, okay? This level needs to have at least a 3 in it. So this is a 1-to-3 risk to reward ratio. You're risking 17 pips on GBP/JPY to make at least 50, okay? So after that, all that's left, ladies and gentlemen, is building the courage to enter into a trade. So the market comes back into discount, right? It shot through the psychological level. I did not enter yet. I wanted to see a candlestick body close above the 200. So we got that here. I entered into the market. My stop loss was beneath originally the 16500 psych level. So right down there, I was entered into the market. We come back down for another test right here in these two candlesticks, and the market goes. Give and go. I sent you guys the screenshot. This was $5,000 in about an hour and, I don't know, 5 minutes maybe. CYPRX confluences to the T. We failed to close beneath the psych level 1, failed to close beneath psych level 2, bullish environment. After the market spiked through this liquidity, we had, again, a failure swing low. See here, the market failed to close candlestick bodies beneath this level. That is a higher low, ladies and gentlemen. You already know what this blue level was, right? It was a previous area of interest where London session traders or London session market participants or market makers or whoever is the people that you can't see, the boogeyman, okay? This is where they left a footprint behind that if another banking institution is going to buy, this is most likely where they're going to do it from. Okay. And you guys see how that played out. Logical target areas, boom, smacked right through. I told you guys I took profit literally like an hour later. I made 75 pips off this trade, in and out, dunzo for the day. Honestly, dunzo for the week, because this week has been stressful already, and I can't be trading when I'm stressed out. It's nuts. It's like a whole nother, I don't even know, mental mind game that you play with yourself. No point in it. So I'll stop my recording there, and then I want to add one more thing, because this is not going to get uploaded onto this part right here. So boom, cut right in half, and then I'm going to give you guys a little bit extra sauce.
I won't stop till I hear him say